Hello and good morning. This is Benaiah Willis. I do wish everybody a happy and healthy start to the day. What we will be discussing today is Bitcoin synopsis as always. We'll be segueing this into two vital segments. First and foremost will be fundamental analysis, where we'll turn our attention to the real world news and find out what's occurring. And then we'll segue into the technical analysis, which is our real quantitative advantage over, your standard Tom, Dick and Harry. So what we're going to be doing today is demystifying the volatility. We're going to be demystifying what's likely to occur based on probabilities and statistics. Now, first and foremost, what I do want to mention here is it is a brand new working day, right? So it's basically Tuesday. It's the 10th of October. Now, yesterday was a US bank holiday. It was also a Canadian bank holiday, and it was also a Japanese bank holiday. So we do have a return to work by a lot of the liquidity providers. So what does that mean in layman's terms? It means the Japanese economy is back, the American economy and the Canadian economy are back in action. So again, we do expect a liquidity injection. What does that really mean for the markets? Well, we'll find out this week. We've got CPI later this week, which is the Consumer Price Index hailing from America. We've also got the UK GDP coming out from, again, the United Kingdom, the Bank of England, the National Statistics Office, and all that razzle and dazzle. We've got Andrew Bailey speaking from the BOE later this week. Okay, so he's representing the Bank of England later this week, Mr. Andrew Bailey. We've got Christine Lagarde speaking for the ECB today, which is the European Central Bank. So fundamentally, there's a lot of volatility and legacy. To further exemplify this, we've got the FOMC meeting, which is the all-important Federal Open Market Committee meeting. Now, what often tends to occur is market capitulation around this time. What does that mean in layman's terms? It means I expect the market to fall, as it typically does around these periods of time. An extension would be this. We've got the IMF, which is the International Monetary Fund, linking up every single day this week. Oh, that's interesting, isn't it? They even linked up yesterday on the bank holiday. That's interesting, isn't it? So there's also war going on. I mean, you've got the Ukraine saga, the Russia saga, the Israel and the Gaza saga, right? So to summarize, we've had extended bank holidays. Last Friday, we even had a Chinese bank holiday last Friday, okay? Yesterday, we had the US, Canada, and Japan. So we're back to work today. Later this week, as I say, we've got CPI, GDP, FOMC, IMF, and offshore headwind spearheaded by political tensions. So just setting the theme, right? So fundamentally, the markets are not bullish, my guy, or dolls, proverbially, right? I want to try and represent both sides of the coin respectfully, right? The markets are in tatters. The markets are not stable. So it's very easy to predict. Very easy to predict. We're not in a bull market, thus we would govern in a bear market, meaning the market would obviously be falling if it's not going up. Duh. The pendulum swings the other way. It's polarity. And you've got to respect that. If you want to be a trader, you have to respect that. Don't be a victim to that. Don't hold on to a pipe dream, because when the data changes, you should change your opinion. When the wind changes, you change your sail. Right? When the tides shift, you adapt accordingly. When the liquidity shifts, as traders, as portfolio managers, it's our fiduciary purpose to shift and adapt and evolve to the ebbs and the flows of the fiscal open sea. It's not linear, it's linear regression. It will ebb and flow, baby. So let's segue into the technical analysis, which is where I really sharpen my sword. And particularly, we'll be looking at the monthly, the weekly, and the daily time frame for Bitcoin specifically. We'll be using our trend volume inflection indicator as well as our trend volume pro version 3 indicator, which, by the way, is completely for free. Okay, head over to TradingView, go onto indicators, type in trend volume pro v3, and you will have access today. I submitted the script, the source code, to TradingView moderators yesterday, and they accepted it. So for you guys, what that means is you've got free algorithms now. You've got free access to one of my main edges within the marketplace, completely for free, no caveat, right? You know what we're about with the real McCoy in this. 8 years deep. I spent 80% of my 20s obsessing on this market, finessing my strategy, coding algorithms in my bedroom, so I could free myself from the Marxist construct, so I can spend more time with my family and my loved ones before they perish. So I put extreme amounts of credence on this. This ain't no get-rich-quick scheme. This is how you measure your probabilities morning, noon, and night and keep your fingers on the pulse. My tech does it so you do not really have to. Cool. We've got the shilling out the way. Let's dive into the monthly. So looking at the monthly, it's something we've been stewing on and perpetuating for a long period of time. Now, to cut the fluff out the middle, we've been falling since July. Since July, Bitcoin's been falling. It's been the previous quarterly high and the current yearly high and the July high. So it's ingrained in my head, right? I don't need no notes. I don't need no one to tell me anything. Numbers don't lie. 1 + 1 is always 2 in my world. In my world, 1 + 1 is always 2. Not feelings, it's formula over feelings. Formula over feelings every day of the week. So with that said, let's look at it. So top-down analysis, we do see 55% sell pressure engulfing the monthly. We do have 21 days and 15 hours until this monthly expires, until we open up a new monthly candlestick, which will be known as November's candlestick. That is 21 days and 15 hours away, approximately. Right now, we've got 55% sell pressure engulfing the market. I tend to teach my subscribers this theory here. Imagine you've got tug of war, all right? You're in sports day, you're back in school, you got the red team, you got the green team. Now, the tug of war is an expression concept of volume dominance. Now, if there's 55% dominance to the sell pressure versus approximately 44% buy pressure, who is winning the tug of war? It's very simple and it's a rhetorical question. It's whoever's over 50% dominant. They're winning, categorically. It's not an opinion, it's an observation. And as statisticians, as Bayesian statisticians, as technical analysis nerds, you should be thinking like that. Okay? If the odds govern it, it should govern your opinion. Very simple, right? Cool. Now, let's further extrapolate this, because I ain't stopping there. We've just covered volume. There's a whole myriad of things to discuss. There's a lot of moving variables, such as the trend, right? Again, we touched on the trend that's been dissipating since July. Now, to further, to further go into this bad boy, August was the worst month this year in Bitcoin, right? So this is a categoric headline that you can take to the bank and deposit proverbially. Not financial advisor, not financial advice. But look, August was the worst month in Bitcoin's price action delivery, in saying that it was a red candlestick dildo to the downside. Now, subsequently, price actions failed to govern back above the middle ground of the imbalance of liquidity. So not to bog you down with jargon bollocks, what I'm saying to you in layman terms is this. The worst month was August. We are underneath the middle of August. As long as we're underneath the middle, which we call consequent encouragement of this sell side imbalance, buy side inefficiency, we are going down. Not an opinion, observation. Okay? Now, where does this become cod's wallop? Where are we invalidated? Because this is very important, guys and dolls. We must have an assumption based on ABC. However, we must have an invalidation, right? We must have an invalidation to couple with our assumption on XYZ, right? So the ABC forms our assumption, but the invalidation is predicated on XYZ. So what's the XYZ, you ask? Well, it's this region right here. It's the imbalance of the middle of August, okay? Which, funnily enough, lines up with the 21-day exponential moving average. This is getting interesting, isn't it? This is getting really interesting. So price action delivery is underneath $28,182. That's the big eureka number that you need to remember going into November. Okay, so the number you need to remember going into November is approximately $28,182. As long as Bitcoin is under, which she is under, risk remains to the downside. Again, observation over opinion every day of the week. You can catch this on the podcast Monday to Sunday. I'm talking my ting every day of the week because we stand on the truth and I can represent that. And I can put my dreadlocks on the guillotine and show up the next day and bang my chest and bang the desk and tell you Wagwan, because that's the truth. And I stand on the truth. And who God bless, no man curse. Verizon numerous, strength in numbers in Latin. That's my philosophy. So again, as long as we're underneath $28,182, risk is to the downside on a monthly basis. That's solidified by trend and volume. Very simple. Trendvolume.com, hence the company title. Very good. So let's pull up a momentum on the monthly. So when I say pull up a momentum, what I'm saying is the trend volume inflection indicator, which is our myriad of momentum inflections, ranging from the RSI, MACD, and stochastics. So what this tells us is, okay, is the momentum incline postured? If so, at what number does it become decline postured, right? So it's incline versus decline. A lot of you gym bodies out there, imagine you're doing chest at the gym, right? So either the bench is on incline and you're working your upper pecs, or the bench is on decline and you're working your lower pecs, right? This is what we call momentum, baby. This is the weight bench to momentum. Now, it tells us if it's inclined and to what gradient, and then it tells us if it's declined and to what gradient, right? It's very important shit. I stand on this. Now, the RSI will continue rising as long as Bitcoin monthly is above $26,969. Currently it is, respectfully. So this is the other side of the coin, right? Whilst I am bearish on trend and volume, the momentum on the monthly is bullish. Just letting you know, straight out the gate without having to give you bravado. The momentum is bullish. Now let's establish why. So again, the RSI is rising as long as Bitcoin is above, which it is above $26,969. The MACD, which is the moving average convergence divergence, better known as MACD, that will continue rising as long as Bitcoin's above $26,330. And the stochastic momentum will continue its onslaught to the upside aggressively as long as Bitcoin is above $21,771. So again, you take the numerator and the denominator. In layman terms, you take the biggest number and the smallest number, and you use that as the inflection. So in this case, the smallest number would be 21,771, which is the stochastic inflection. That does mean this: the stochastics on a monthly will continue rising as long as Bitcoin is above 21,771. Right now, she is 27,680. So there's a huge disparity between the inflection and current price action delivery, to the tune of approximately, I'm going to say, $6,000. Okay, so as long as we're 6,000, on an advance, that's good. But if we start to fall and we lose 6,000 per one, that would be incredibly bad. Now let's just talk about that really quickly. The stochastics is measured on the inflection indicator as a chameleon. Is it chameleon? Or is it chameleon? The lizard thing that changes color. Right, this is what the stochastics does. This is how I've coded it, right? I've really nerded out on this and got real dyslexic and very obsessed with it. So what I've done here is I've coded it so when the K line crosses the D line, it turns green, and when the K line goes under the D line, it turns red, right? So if the K line's dominant, it'll be green. If the D line is dominant, it'll become red. Now remember, stochastics is simply a reflexivity stance on the market. It tells you what the likelihood is of a reversion, but pretty much, right? It tells you the extremes. Imagine you've got an elastic band and you stretch it. It's either going to snap or the reflexivity is going to boomerang the opposite way. And typically, stochastic momentum is like a boomerang. You stretch it, and it will ping the other way, right? This is what we call physics, okay? We can measure that with momentum as well. It works in the market and it works in the real world. Elon Musk said this: he's seen many men and he's seen many women break the laws of woman and man, but no woman or man has broken the law of physics. And as Newton once said, what's in motion stays in motion till it stops. So I do put a lot of weight on momentum. It's such a cornerstone to my strategy. So looking at the stochastics on the monthly, the reason I'm bringing this up with such attention is because of this, guys and dolls. The last time, well, I should say this, every single time that we come from the 10 region, which is down here, sub 10 specifically, and we go to the 60 line, which is right here where my cursor is, this horizontal line here represents the 60 line. Every single time the market falls, it has a breather, or it falls, or it capitulates, or it sells off, or it rebalances. Whatever lingo you want to attach to it, that's what it does, right? We're here to make observations, not opinions, okay? And we look at the history to tell us where we're going. To know where you're going, you've got to know where you're coming from, right? Now, the last time we had this signature was in 2019, particularly November the 1st, 2019. What happened then? Price action fell by orders of magnitude to the downside. We fell by thousands, okay? Back in November 2019, need I remind you that led to March 2020, which was the Great Reset, right? We had the signal given to us in November 2019 to get out the market or to sell or to short. Subsequently, months later, we had the great pandemic of March 2020. Numbers do not lie, my friend, and I stand on it. I lost my father and grandfather to COVID, so I'm not telling you it's Mystic Meg, get your crystal ball out, we'll predict the future. No chance. Not saying that. What I am saying is that when the momentum is falling, the trend is falling, the volume is falling, one can govern with certainty that the price will fall. Simple. It's not a scratch card. It's not no lottery ticket. You can't manage risk on that. There's no stop loss on a lottery ticket. There's no position size on a lottery ticket. There's no asymmetry on risk to reward with a lottery ticket. A lot of you are confused. And that's not a problem because the Marxist construct has made you confused. Things like trend volume is here to bridge that gap and, undo those wrongs, as it were. Okay, so that's cool. So we understand numbers don't lie to us. That's good. Cool. Now let's come out of that. Let's go to a weekly. Pull up a weekly, baby. So looking at a weekly, what do we see? Well, weekly is pretty much battered and all. Now, I'm going to represent this properly. We do have price action underneath the 200-day look-back period. We've also got price action underneath the sell-side imbalance, buy-side inefficiency, better known as a SIBI, okay, which is this price action delivery to the downside here. In fact, we can probably measure that to like here, guys. I'm actually going to measure this in real time for you guys. So what we're actually doing here, right, is measuring the bottom wick of August there and the top wick of the August here, right? So realistically, we're measuring the imbalance here because this wick here, well, one second, let me zoom in on this so you guys can see. And by the way, if you're watching on podcast and you can't see the visual, now's the time where you should probably whip up the visual. This will be on YouTube as well if you can't find it on Spotify. But the video will be available on Spotify and YouTube. So the idea is simple, right? We're measuring this from 28.6 all the way back down to 26.8. So let me get my words out. Again, you should be watching this, not listening. 26,800 there, bottom end, and top end 28,600, right? Very simple. So right now we are in the middle ground of this imbalance. Okay, and we're sandwiched underneath the 200-day look-back period, and we've got horizontal resistance going back to July. How are we doing for time? 18 minutes. That's not good. We should have been finished by now. So let's quickly speed through this really quickly. Looking at momentum, what do we see? We do see that the RSI is falling underneath $27,932. So what does that mean? It does mean that the weekly is falling on the relative strength index. I don't get in the way of that. We are also underneath the 200-day moving average. I do not get in the way of that. Very simple. Let's move on, pull up a daily, and let's fly the plane to a landing. So looking at the daily, what do we see? We do see positive buy pressure. However, we do have 14 hours and 36 minutes until daily expiry. So again, the volume is the most sensitive metric that we do measure quantitatively. The volume can change in a heartbeat, meaning, it takes one fat finger to fuck shit up. Does that make sense? If one big whale wants to enter the market, the volume will flick really quick. So the idea is that, take it with a pinch of salt. But again, as the volume does change, the indicator, the trend volume Pro V3 will update accordingly. So you haven't got to do no jiggery pokery. It will literally tell you in your face. As long as you can read English, you'll be fine. And even if you can't read English, it's expressed in numbers. So again, you'll be fine, right? No matter what nation, state, tongue you speak, you'll be fine. As long as you can understand numbers, you'll be blessed. And who God bless, no man curse. I stand on that. Anyways, the universal language is numbers, by the way. It's not English, Spanish, or German. The universal language of truth is measured in number. and what gets measured gets accomplished. How we make sense of the sciences is in numbers, right? When we look at chemistry, biology, physics, we understand it in numbers, okay? We formalize it in numbers. So it's a great school of thought, and it's one I adopt aggressively when it comes to technical analysis. Okay, cool. So looking at the daily, what do we see? We do see 70% buy pressure currently with 14 hours to go. The daily is underneath the 200-day, much like the weekly, right? So this is where the similarities start to occur on the kaleidoscope of time fractal analysis. We see the weekly underneath the 200-day look-back period, and we also see the daily underneath the 200-day look-back period. Paul Tudor Jones said it the best. Paul Tudor Jones is like Warren Buffett to hedge funds. Any time an underlying asset is underneath its 200-day look-back period, typically it's in a downtrend. However, the polarity would imply itself in saying that if an underlying indice, commodity or asset is above its 200-day look-back period, it would be in an uptrend if it's above. If it's below, it be below. Make sense? Hope it does. Now, just spoon-feeding nuance for anyone that's new to that jargon. To a lot of the OGs, that'll be like, oh my God, why is he saying that? But, it's not about, it's not about us. It's not about you or me. It's about everybody, right? It's about the whole consciousness of us as a collective, if that makes sense. So sometimes it's good to go over the basics, just so you remind yourself of what really matters and what does not matter. Because I believe in this day and age, there's a war on your attention. It starts in the house. It starts with your spouse. It starts with, your co-workers, the news. So there's a lot of distractions on your attention. So again, it's good to go over the basics. It really, really is. Now let's look at the inflection indicator and let's get some alpha out of this one. So what we can see here is that the MACD is falling underneath $27,800 on a daily time frame, and the stochastic momentum is also falling underneath $27,600 on a daily time frame. So realistically, what does this tell us? It tells us that the daily momentum is now declining. It tells us daily momentum is declining, not inclining, declining. It's working lower chest, not upper chest. So realistically, I posture accordingly. And again, this week we've got CPI, GDP, FOMC, IMF, and a myriad of war tensions. I don't speculate to the upside. We look at it on a monthly level, a weekly level, and a daily level, and we can see that it's been downtrending since July. That's not an opinion, that's a fact. Do you understand that? I don't want to sound condescending, but a lot of you need it banging heavy, heavy, heavy. Because a lot of you are speculators and a lot of you are gamblers. And I have to shake that shit out of you. Cool, leave it there. Is there anything else worth mentioning on topic? Let's pull up the Dixie. I do want to pull up the dollar really quickly, because it's all good looking at Bitcoin, right? But remember, we're looking at Bitcoin versus the dollar index, right? So let's pull up the dollar index and let's see exactly what the dollar's doing today. So looking at the dollar, what do we see here? Well, the dollar has had, it's had one of its biggest rises ever, 12 consecutive weeks to the upside, which has been one of the dollar's longest reigns of power. Not exaggerating, it's not hyperbole, I'm being serious with you, right? That's why the stock market, at the S&P 500 specifically, that's been falling, right? So the S&P 500 has been falling ever since July. Bitcoin's been falling ever since July. However, the inverse correlation has been found on the dollar, which makes perfect sense. Perfect sense, okay? If you've got a strong dollar, you've got weak assets, and vice versa. If the dollar's weak, you've got strong assets, right? However, right now, we've got a strong dollar, thus we've got weak assets. It's so simple. So simple. Yet humans make it really hard. Oh, the market's volatile. It is gambling. It's just luck. Bro. Do you know the data? Do you sink your teeth in the data? Or do you get force-fed what to believe by your nation-led news channel? Come on. We are really on this thing backwards and front. Backwards and front. Why have I got to spoil it? Let me just drink some coffee really quickly and we'll jump back into the dollar and what it means. Okay, cool. Try not to get too gassed up. But yeah, again, look, the dollar's been on an uprise for 12 weeks solid. That's one of the most historic rises in the dollar's history. So I do think it's not over. straight out the gate here, I do think the dollar will continue to rise in power and dominance, and it will continue to swallow up every nation-state fiat-true barter that's inferior compared to it, meaning the pound, the euro, the Aussie dollar, the Great British Pound, the Swiss franc, the Japanese yen, Canadian dollar, the Brazilian real, the Russian ruble, the Swiss franc. The lot of them, they all peril in comparison to the dollar. I don't speak about inferior currency. I don't. Because it's inferior. I don't denominate my assets in inferior barter that's being debased at a biblical pace. I don't do that. So cool, leave it there. So looking at the dollar, what do we see? So it has been calling off for 1, 2, 3, 4, 5 days, right? So this is the 5th day of the dollar cooling off. Now we are touching the 21-day look-back period, so this would act as support. Failing that, it would be the 55-day moving average on an exponential basis, better known as the 55-day EMA. And that is coming at approximately 104 on the US dollar Dixie index. So in theory, what we're looking at is this. We do have waning momentum as well, which is quite aggressive. This is probably the most scariest thing on the dollar that we'll be looking at. Now, the RSI is falling underneath 106, MACD and all, and the stochastics is 107 on inflection. So realistically, we do see the dollar starting to decline, especially over the last 5-day period. But remember, it's had a 12-week onslaught to the upside with no fucks given. If it wants to have a 5-day break, let it, I think the momentum oscillators need time to cool off anyway. And that's what we're seeing here. We're seeing momentum cool off to the downside, simmer down as it were. Pardon the pun. And I do think it will recuperate accordingly. I don't think the dollar's over by any stretch of the imagination. So yeah, keeping it simple with you, I do put a lot of weight on the US dollar right now. It's very bullish. Having a 5-day breather is fine and natural. It wouldn't be organic if it never had a 5-day breather after a 12-week, record break. Right? It broke a record recently. It's allowed 5 days off. It's like, like Beyonce when she does a world tour and then she has like a week off, or Taylor Swift, she does a world tour and then has a week off. They're allowed it, dude. They went hard as fuck. And they're going to go harder when they come back. Do you understand what I'm trying to say to you? So it's the same thing with the dollar, dude. It would not be organic if it just ripped up with no retracement, right? You got to have retracement, for fuck's sake. But again, it doesn't mean the trend's over. It does not mean the trend's over. The dollar trend to the upside is biblical and it will be televised. And especially during elections, right? I mean, come on. It's very textbook. Anyways, what else should we bang? S&P, might as well, and then we'll round it off. How are we doing for time? 27 minutes, not too bad. So let's look at the S&P 500. So what do we see here? Well, the S&P had a retracement. It's bounced on the 200-day look-back period, very textbook. And we've had a bounce. We've got momentum geared towards the upside. We've got RSI, MACD, and stochastics, all of which with an incline posture, meaning going up, which is good for legacy, which is good for the health of the American economy. This is what we look at. The S&P is cherry-picked basket of stocks, particularly the top 500 based on market capitalization. And it tells us the barometer gauge on the health of the American economy. It encompasses companies like Apple, Netflix, Google, Microsoft, your big ones, your heavy hitters, your household names. So if this index is doing well, typically the economy is doing well, contrary to what your media tell you, right? Your media would tell you it's all over. Well, that's probably the time to be buying back, not gonna lie. When they're fearful, we're greedy, word to Warren Buffett. Observe the masses, do the opposite. We're not pig, we're not sheeps. Right? Pigs and sheep get slaughtered. We're not here to copy. We're here to set trend and trailblaze. Make sense? Hope it does. So, again, I think we're close to a bottom. I do think we're very, very, very close to a market bottom. I do see a lot of hysteria, a lot of fear, and a lot of panic, which is a perfect recipe on the Fear and Greed Index, because we want to do the opposite to Tom, Dick, and Harry. I call the Fear and Greed Index the Tom, Dick, and Harry Index. If Tom, Dick, and Harry are fearful, guess what? People like me, we're not, right? We want to buy the fear, we lick our lips, and we gulp it up. And we slurp the froth off the Guinness, proverbially. So you know, I don't think we're out of the woods just yet. I think we'll see a bottom in the markets across the board when the Federal Reserve pivot. So when they turn from hawkish to dovish, we want to see that transformation from hawkish to dovish. Then we can be speculators to the upside. You can buy gold, Bitcoin, shit coins, S&P index, not financial advice on none of that, right? But I'm just saying you can buy most things that are risk on and do well in an environment that governs it. Right now, we've got quantitative tightening, which is QT, not QE. We want quantitative easing for us to be bullish on the market, which would be a dovish environment. We don't see that, so why would we speculate on that? It's nonsense. So I'm going to leave it there. Is there anything else to mention? There was echoes today, actually. I do want to mention this on topic. There was echoes that the Chinese economy might start pumping out stimulus. Now, this would be the first indication of the bottom of the bear market. As soon as the Chinese economy start pumping out stimulus to their citizens, I believe it has a strong likelihood of affecting the Federal Reserve, and I think they will then pivot to be dovish, and then they'll start printing money willy-nilly, and then risk on assets will go up. If the money's not scarce, what gets measured against the money becomes scarce. I'll repeat that again. If the money is not scarce, what gets measured against the money becomes scarce. So when they start doing quantitative easing regimes again, when they start handing out stimulus, bounce back loans and furlough schemes and all this malarkey, that's when the market will be buoyant. That's when we'll see a V-shaped recovery. But not until then. I'm not going to blow smoke up your ass. And I'm not going to waste your time telling you shit that's not true. Keep it simple with you. Anyways, remember, we've got FOMC meeting up this week, so let's see what they say. That'll be a good indication. When is the FOMC? The FOMC meeting is actually on Wednesday, okay? Wednesday the 11th. So watch out for that, because that will be an indication. Obviously, we've got the IMF linking up all this week. We've also got Chinese CPI as well as the US CPI. So there's a lot of integral data sets coming out this week. And we've also got the president of the European Central Bank, Christine Lagarde, on the Saturday, as well as Andrew Bailey from the Bank of England. And I do believe they're speaking in Morocco. I do believe there's a massive link up, a annual international banking seminar called, what's it called? I believe it's the G30 Annual International Banking Seminar. It's held in Morocco. And all you need to know is that it's volatile. It's volatile times anytime that occurs. So I'm going to leave it there. I'll be back on tomorrow with some more razzle and dazzle. Each one teach one. God bless you. Have a great day. And I will see you tomorrow.